Okay, good morning, traders, and welcome to this live intraday strategy webinar. Today is Tuesday, September 29th. Mike Boutros with you on the horn. Great to be with you guys this morning. Hey, Rohan. Hey, Jay, Joseph. Great to see you guys in the morning, in the room this morning. So we're heading into, as I always tell you guys, a very treacherous time period, end of quarter, end of end of month. Lots of flows that are going to interrupt and kind of wreak havoc on intraday price action. So again, right before we start the onset of the webinar, guys, I'm going to tell you really good time to limit exposure, reduce position size. If you do take on any extra positioning or any new positioning, make sure that your leverage is reflected as such in the environment that we're in. That said, we're getting the dollar pullback just as we expected. So on the menu today, we're going to hit DXY, Euro, Dollar CAD, Dollar Swiss, Gold, Sterling, Aussie, and Kiwi. That's sort of what I have on the menu. Any other questions or trade setups, guys, as always, feel free to throw them on the message board. But man, I guess dollar CAD's the only one I'm still kind of in, although it's come right back. It's the weakest of the moves, right? So we saw the dollar pullback that we were looking for, but CAD has been really weak, has been unrelenting, unable to give a stronger sort of pullback in dollar CAD. So we'll go over that in a moment, but let's start off with DXY. Y'all have seen this chart before. Here's the weekly. Just wanted to show you the precision of the reversal off the March low at 94.65. Slope resistance at that same region from the weekly standpoint. And for now, we're just looking for the pullback, right? Under the assumption that we did make a more significant low, but we are now testing the first major resistance level, right? And that's at the objective yearly opening range low at that March low, 94.65. And again, that basic slope resistance. Support still going to hold 94 essentially, 93.88. It's the 618 of the 2018 advance, 2016 reversal day close, low week close, excuse me. So the immediate focus is on a break of this immediate range. If it breaks to the downside, you're not straight up looking for a resumption, but you are going to be looking for a larger sort of kickback lower. Key support is still going to be all the way down 92.28. So from the weekly chart, you kind of got your key levels mapped out. A breach, a close above 94.65 is what you need to really set this thing on off for a larger rally. Here's DXY in the daily chart. Pretty damn clean, okay? I'll note again, this is the highest momentum reading we've gotten since March. So on the way down, if we find support around 40 on the daily chart, okay, specifically 93.60 on a pullback would be a nice spot. You'd look for support there, and that would be a change in the momentum profile, guys. Remember, we were holding 60 resistance ever since that high. Downtrend, 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 multiple oversold, downtrend, oversold, downtrend still. Here's the first breach above 60. And if we pull back and find support at 40, support within the uptrend, that's further conviction of a shift in the momentum profile. Again, on an objective basis, here's a breach of the monthly opening range. You stretched into a high right in the 25th of the month. Not going to press this any further. Again, risk for a little bit deeper of a kickback. 94.65 is still the level to beat. There's a lot there. Downslope resistance, former uptrend support turned resistance in blue, right? There's just so much here, guys. So here's the intraday chart that we've been working with. Nothing's changed on this. Here was our last DXY update as we were coming into the start of the week, okay? So that resistance zone at 94.65, which we talked about just now at length, did end up holding, right? We closed below that on Friday, and into the open of the week was perfect resistance. Here's 94.27. Here's near-term support now at 93.88, 94, 93.99. You get the picture. So again, curb your expectations, guys. We're heading into the end of the month. We're heading into the end of the quarter. There's the first major debate for the presidential election today with Joe Biden and President Trump. So certainly will be interesting to see, if that moves anything. Just as a disclaimer, very rarely are you going to see necessarily a debate move markets per se, but man, you never know in this market. These guys gaff so hard, like who knows? So in any event, my point being, you have non-farm, you have GDP out of UK, you got GDP out of US, you got non-farm payrolls on Friday, you got the start of a new quarter and a new month. Stay light. Do yourself a favor and stay nimble. That said, DXY now probing first major support level. Want to see a reaction here. If we do recover, again, near-term resistance, I'd still keep a soft target at 94.27, but I really wouldn't want to see anything above the weekly open, excuse me, which is right here. So we're going to keep that as our near-term sort of bearish invalid. Anything above that, you're looking for straight resumption again. I don't want to be stuck in it. But this is your first level. Second level is going to be right here. 38.2 of the drop. The September opening range highs. 93.60, 93.66 would be a nice zone to see failure if dollar is heading higher still. Questions? We could bounce off 94. You could, Rohan, 100%. Yeah, you could. It's actually a really nice pivot. It's a 618. It's the August opening range high, so absolutely you could. My only problem with that interpretation, Rohan, is the breadth of the correction, in my opinion, might be shallow. Listen, from here, yeah, into the US trade session, you could even see a rally back to the median line, but you'd still be risking, in my humble opinion, Rohan, another low, just to complete sort of a three-wave type of correction. It could be this, could be it, but I'd be surprised. I'd be surprised on the onset or on the back of a stretch like this if that's all you get. Plus, end of quarter, end of month. There's gonna be position jammering, guys. It happens every time. I'm only telling you this out of extensive experience. I used to be a serious, real near-term trader, and I would be trading on the desk, obviously using the brokerage's money day in, day out, 5 standard in, 5 standard out. But, you get slaughtered in these crossovers at the quarter and month ends, as you just see a lot of thin liquidity, just massive repositioning, and all of a sudden the intraday price action gets you whipped out. So just don't do it. If you're gonna trade now, stay light. If you're in positioning from either yesterday or you're holding a decent position on a dollar short, I wouldn't necessarily be bailing, but I would be taking a little off here, bringing stops to break even for sure. Heading into tonight, heading to tomorrow, all stops should be break even. All right. He says, thanks for sharing your experience. Okay, sure. Yeah, Rohan, my pleasure, man. I just, anywhere I can spare you guys making the same mistakes I made over the last 20 some odd years, I see as a win. So again, near-term chart's pretty clear on this. So where does that leave us on euro? Well, here's what euro looks like. Where was our last euro update? I believe it was here. Yep. So here's what euro looked like on the 23rd. You guys know where we were on this trade. You know how we traded this. I wrapped up the rest of my short at 16.16. I've been looking for a bounce ever since. Unfortunately, I'm not going to art you guys, I didn't get this bounce here. I chose instead to take the dollar weakness versus the dollar CAD, which wasn't a good choice. But if you did take the euro reversal, you did take that bounce off support at 16.21. The first two levels have been taken out. I would caution, again, a good area to start taking a little off the table if you're holding along on the dollar or euro rather. Stops break even or better. The next major zone is sort of my bearish inbound. I think that's 1750s, 1765 here. It's a basic 38.2, guys, nothing fancy. You got a lot of swing lows, right? It's in fact the monthly opening range lows. Slope resistance, right? There's a lot there. I've been trying to give color to this immediate advance, and every way I slice it, guys, I feel like I'm just kind of pulling at straws here. But just to put things, what could be just basic gradient of the slope of the advance still puts into focus, right, that 1750 level if we breach here. At the end of the day, we're opening the US markets at resistance right now. We labeled 17, it's a level we've been watching, former swing highs, former swing lows, and the like, right? But you still leave the risk for a larger recovery well above 1660. So here, and again, if we push higher from here, you're basically risking 1750, 1765. In an ideal scenario, if you're like, hey, Michael Boutros, paint a picture here of what your ideal scenario would be with roses and flowers and rainbows, I would say you see a topside slice here, maybe a jackknife lower, but you do get a final stretch into a high before another low. That's just conjecture, guys. I'm just giving you, again, a kind of a trading mentality of where we would look in this market on these conditions. Expect what would screw the most amount of people before the next move resumes. So that's kind of where I'm thinking here on euro. Bottom, long story short, looking for topside exhaustion. So, I'd be surprised if this holds, but it could be here. If we stretch higher, nice zone here. Need a break below 1660 to get this thing going. The October 2018 high at 1621. Guess what, guys? That's now the weekly open. So further conviction on a move sub 1621 really being the onset of the resumptive move towards 115. I mean, you got 1550 is the parallel, but you're essentially looking for 115. All right, questions on euro? Right on. That's number 2. 3, dollar CAD. So another one where I wanted to update this for you guys last night, because this is kind of where I've been involved this week. As you guys know, I was in a short here last week. We took half the trade, a little bit more than half off on this stretch lower, well above 3340s, and then got stopped out of break even on Friday. Jumped back in, and we kind of, we're a little bit in the money, basically break even. I don't really like that we haven't seen the stretch. Comparatively speaking, you look at Aussie, you look at Kiwi, hell, you look at Swissy. They're all moving a little bit more fervor against the dollar. Dollar CAD is actually the one that's moved the least. So just tells me that we're putting our marbles in the wrong basket here. This is not the trade that's going to give us necessarily the dollar weakness. So looks like CAD weakness has kind of got a trim on this. So listen, if we get stopped out break even, I'm just going to eat it and I'm just going to move on. But at the end of the day, here's the reason why we've been thinking for, just generally speaking, dollar CAD pullback. Dollar CAD on the weekly looks like this. Basic slope off the highs, right there. Former swing lows, the close low, right there, 34 and change. Okay, going back to the daily chart, it's 100 off the high, was 33.84. We talked about that level for a while. Guess what? On a closed basis, it's been rock solid. But guess what? The longer that we hold, the longer that we test here, the more dramatic the break will be if it happens. So I don't want to continually press this. We've taken a couple of stabs at it. I'm done if this gets stopped out. At the end of the day, a breach here, you're looking for 34.50. It's the 618 of the decline off the June highs. You got slope there, right? So again, letting it play how we'll let the cards fall how they fall. No harm, no foul on this one. But I'm still of the mindset that you need some sort of just a pullback before you can resume higher. Seeing how this thing can coil, or how it is coiling, at the end of the day, if this pops higher, 34.50, 35.15 on a stretch, but areas of interest for limits if you're holding longs, and exhaustion if you're looking for new positioning. So again, here it is from the start of the week, guys. No change. No change. So a little boring on dollar CAD, but hopefully we get a move on this as we get towards the end of the week. We still got non-farm payrolls on tap. All right, that's Looney. Number 4. Here's Swissy. So a trade that I've kind of been sparingly dropping on you guys, because the levels when we see the major turns have the only thing that have been clean here. So recall, I'm going to go back to the weekly charts on this. Recall with Swissy that we talked about this level for like months, 90, 90, 90, 80. We sat there for weeks, straddling it back and forth, close above, close below, close inside, start the week at. Here's the first breakout. We cleared the monthly opening range. We cleared the consolidation zone that we were in, and sort of a little bit of a failure. Not much on the weekly charts to be desired, but the only thing I want to highlight is the basic 38.2, the yearly range, still gives you 93.40. Where do we go from here? Well, here's the daily chart. If this slope interpretation is correct, this was the level that we were looking for as sort of a big first major zone. It was going to be 92.52. Okay, the low day close for the March drop. 100 off the low. So if this is just, excuse me, if it's just correctionary, that's 2 legs up. And then you had slope, the median line right there. Happened a couple days late, and the high happened a little bit higher. But here's the pullback. I'm not crazy about this slope, but you know, based on this interpretation, there's a little more room for the downside. You know, the 25% line comes a little bit lower near 92, right at the figure. You know, the lows from back here in 2018 come in at 91.86, maybe a little bit lower. Slope support doesn't come till here. So my point is, our idea for turning dollar CAD lower was the play. How deep that play gets, that's where I'm getting a little concerned. I don't want you to get too aggressive on it. Here's what it looks like on the intraday, right? That's the same slope. Looks a little cleaner here as you see intraday price action react to the gradient, right? But here's that parallel right at 92. All right, 38.2 is 91.86. Both levels on this immediate decline. Look for something. Look for something. You have former swing highs here. You got slope there. If you're holding shorts, again, areas where you want to start, lightening that load, taking some profit. Stops at break even should be already at this point. But you get the picture. We're really nimble on this dollar pullback. I don't want to get too aggressive. I love that it turned, but we're working on our second daily decline. Coming to the end of the month, coming to the end of the quarter. Stay on your toes. Rohan, I got you. Yeah, we'll definitely take a look at SPX. NASDAQ, I don't have anything, but if there's time, I'll take a look at the chart. I'm more than happy. Okay. Hopefully going in to get this cast removed tomorrow, guys. So my mouse movements, I'm gonna have a soft cast on, but should be smoother. All right, so that's dollar Swiss. Next up on tap is gold. We went over this yesterday as well. I wanted to give you guys an update on this because we did mark, so again, no change dollar CAD levels. We did mark no change to the dollar Swiss levels. No, we did mark an outside day reversal yesterday, okay, off of the lows. Typically, that's going to be an exhaustive trade. The fact that that happened at support is what's having me look for a little bit more of a constructive move. Now, to be fair, heading into the U.S. trade session right now, you are on tap to make a 2-hour outside reversal to the downside, which suggests, again, you can see some kickback, but I'll go over this in a moment. Here's gold first on the weekly charts. Y'all have seen this chart before many times. If I can click that, okay. Here's what it looks like. Okay, here's the break. Not really coming off a major support here. So from the weekly standpoint, this could be just mid drop. You still look lower, sub 1909, bearish inbound 1932, end of combo. Okay, 1932, that's all you gotta know. That's what would mark resumption higher. Daily chart looks like this. Now, the lows that we made last month, close basis, we closed just a hair below, but you got a lot of slope here on the upside holding that, and a lot of slope on the downside. Here's the channel for the current operative position that we're in. So you're coming off of confluence uptrend and downtrend support. Like I said, yesterday, you marked an outside day reversal. What does that mean? This candle took out the previous day's lows and closed above the previous day's highs. Typically an exhaustion. So the pump could get a little higher, right? It's not full on reversal, but it could get a little higher. Downside moves, 1837, 1803, if you were to get down there, I think would be an even more key level to look for a larger, more significant low. But remember, guys, on whole, this thing just made a break of the monthly opening range here on the 22nd. We've registered a low on the 24th, you know what I mean? So you're looking for that downside buy since to close the month, but coming off this trend support could see a little bit more of a pop. So what does that mean for the intraday? Well, here's what it looks like. Again, this is the guidance I gave you guys last night. Yeah, I think above the lower parallel, you just a lot for the scenario for a stretch towards 1896, right? That's a basic 38.2, nothing fancy. Down slope resistance, up slope resistance. You know, if you're going to find a choke point and failure for the resumptive move, that would be a decent spot. Look for reaction there. Again, depending on where that happens and when that happens, we'll reassess. But I do think there's a risk still for a little bit more of a pivot higher. That said, again, like I said, 2-hour reversal here. You are at a resistance pivot that we were looking at on the way down as a support pivot right here. So again, could get a pullback. if you take a real granular price action, here's the 60-minute just of this week's range, you'll see whoop, that the 618 comes in right there, 1864. So as long as price holds this general vicinity, yeah, I wouldn't rule out another push higher in gold. And guys, you know me, I've been bearish gold for a while. You know, I always tell you guys, I catch so much heat from people who are just wildly bullish, and you just say the word bearish with gold, and they you know, they accost you basically. So that being said, look for, you know, an exhaustion low on any weakness into this zone, big zone or bigger zone on the top side. It's 1896. I'll look for a bigger reaction there if we get it. Make sense? Okay, that is gold. Next up, sterling. This one kind of collapsed pretty hard after that rebound, bigger than I expected. Here's what sterling looked like back into the start of the week. So we talked about this. We talked about this last week. We talked about the start of this week. This was on Sunday, saying sterling's at support. Sterling's at support. And guys, by the way, sterling's at support. It was a big fib confluence. You had the 2019 open. You had downslope support, looking for the pop through 28 to really validate a larger recovery. Well, it happened, right? You got the pop through 28, and boy, did it rip. But that rally reversed pretty hard, and then it kind of meandered, and now we're kind of sitting mid-range for the week, which I hate. Here's the weekly high, here's the weekly low, or kind of mid-range. So nice pop. You got the 236. You didn't quite get to the upper parallel here. I think you get some more consolidation. Even if you break lower, look for support ahead of like 28, 2790s for a final stretch. Again, here's what the 120 looks like comparatively. So no change to any of those levels. I just think you see a little bit more back and forth. So 128, look for, you know, a support level there. The weekly open comes in just a pip above the 2019 open. So we'll work with that as sort of being the last downside level. If we break through that, that's kind of an objective range. I'm neutral, guys, until you get below 27, 2693, that same support, which was so critical here. Again, take a look at it on the weekly chart, blow your mind. Massively important critical pivot zone. Look all the way back till 2016, guys. Look at the crosshair. Huge pivot, plain and simple. So again, with where we are in the month, sterling, I'm willing to shelf this one for a while. I just wanted to give you guys a heads up on where we are in price. Pretty big major pivot. If you do see a recovery or a rebound from here, you know, levels of interest for possible exhaustion. But as of now, this is still key support. This is still key support. All right, that is sterling, number 6. Number 7, Aussie and Kiwi, and then we'll hit your questions real quick. Here's Aussie. Really nice rebound there off of its key support zone. I'm going to take this one back to the weekly chart as well, because what a rebound off of a major pivot yet again. We talked about 70-60-16 into 70-42 for months, actually for years. It was last year's open. It was the yearly opening range highs. It was this year's open. It was resistance, the origin of the breakout, and it's now support. So we started talking about Aussie support right into the start of the week. First level of resistance, 7130. We're there now. That's the 618 of the entire drop in the 2018 decline. Former slope resistance, or support rather, turned resistance. Looking for a reaction right here. Here's what it looks like on the daily chart. Again, 7125, 7131. There's that same confluence zone. Really nice pivot. Last month's open, right? Here is the reversal off support. Look for a reaction here today, right now. Here's what it looks like on the intraday chart. If it weren't for the time of month, you know what I mean? I'd almost be tempted to jump into a short right now. Huge pivot, swing lows, 618 off the high, off the low, 100 off the high, beautiful pivot zone, but I just can't get it. I just can't get confidence or encouragement, whatever you want to call it, to really get in the weeds right now with the monthly end and all this event risk on tap. It's just too, you know what I mean? Clear guidance on the breakout scenario. As far as support's concerned, I'd want to say 70, 76, the same level that we were looking at on the way down and on the recovery's resistance yesterday. I'd like to say that's key support, but at the end of the day, even if this thing drives into 70 again, guys, it's such a critical pivot zone. Like, that's the problem. Again, one of those trades where you made a really clean break of the monthly opening range, gave you the late month low, but the recovery now, you're looking for exhaustion. Ideally, ahead of like 7170s, 7190s. So even if you get the pop, maybe an exhaustion high there. But it's sort of the idea here with Aussie. Coming off a bit major support, kind of like Sterling, coming off major support. Okay, and Kiwi is essentially the same thing. Little bit of a different animal because it's still within the confines of the formation where we have Aussie, which kind of broke downtrend support. And again, you got that accelerated drop as we usually do. Kiwi's a little bit more tighty, in my humble opinion, right? For this one, 66 would be ideal. 66.27 would be like the max. Really wouldn't want to see much strength beyond that. So I'm kind of looking to see what this holds. I was looking at this morning, just to give you some reference, on 100 off the high is pretty darn close to where we're looking anyway, right here. You know what I mean? So tentatively watching this one. If we get failure at the end of the day, break close below 65.41. The objective weekly open marks resumption, looking for 65, looking for 64.84. My only thing I don't like about this is if you're not already in this, or if you're looking for new positioning, rather, if we get failure here, the stop is the problem. That's why we need a new high to trade against to take a short. Because if this breaks, there's really nowhere to put a stop, guys. Nothing to like 66.80s, and I don't want to be in a trade 80 pips under. So I'm really just looking to see what kind of reaction we get here. If that doesn't hold, if we break through, you're gonna want to shelf this until we get into the start of the month. Could we expect to gravitate down to the lower end by the end of month? So Rohan, you're expressing my concerns exactly. Because we're heading into the end of the month, end of quarter, I take everything off the table. My expectations, whatever I tell you now, Rohan, would be complete guess. I've been chopped up so many times at the end of the quarter, guys. I just don't do it. I just don't do it. Yeah, this thing could drop into 65.40 today and then rip through 66. It's just end of month flows, end of quarter flows. I hate them. And major event risk on tap. You got political risk on tap with all this concern on whether they pass the bill for the second stimulus aid, and then you got the debates today. It's just an environment for me of which, with the technical unclarity that we see here, I'm not going to get aggressive. I'm not going to. We had a great month. I'm not messing it up. So that's just my take, man. Rohan, a pistol to my head. Yeah, I think it washes out higher, and then you start to do drift lower, but it's anyone's game. We have to respect the environment we're in. The biggest mistake traders make, guys, is they fall in love with a strategy, they fall in love with a type of thinking, a type of trading mentality, and they're static. And the markets aren't static. The markets are constantly changing. And if you're not in line with that flux, I always say having your hand on the pulse of the market, and you keep trying the same type of practice trades in an environment that's different, that's where traders get chopped up. It's not necessarily a bad strategy, it's just not the right environment for it. So, part of I see part of my big job here, guys, not just telling you where the opportunities are, is also to steer you away from where you shouldn't be doing things. Because if you take my career as a whole and just minimize some of those losses, we'd be a lot better off than if we just had a couple more good trades, right? So if I can steer you guys away from a bad practice or just a bad environment to avoid, that's what I'm going to do. All right, so that's Kiwi dollar. Let's jump into your questions. That's everything from my list. So I wanted to look at SPX and NASDAQ. For Rohan, here's SPX. in my estimation, we made a breakout yesterday, plain and simple. If you guys look at this, here's what the SPX looked like on the intraday charts. Here's what our last SPS update looked like here on SB. I gave you guys an update on this last week, if I'm not mistaken, right early in the week, as SPX was coming into major support. Here's the daily chart. That level was 32.19, okay, 32.26, absolutely massively critical level. The objective yearly open. You had 100% extension from back here. Not so crazy on the extension, but just a big, big pivot. The intraday chart had downtrend support there. 25% parallel for the pitchfork that we've been extending off the high has been pretty decent. And we were looking for some sort of reaction on that level. Well, didn't quite get it there. Held median line resistance. We drove into it. And on the webinar on Monday, yesterday, guys, I was telling you guys, or last week, I was telling you guys, this is, a support level to respect. Resistance at 33.37, bearish inval at 33.54. So what's this? That's this level here. Is this bearish inval? Well, we broke the downtrend. We broke down slope resistance. You did see a little bit of an accelerated pop. For me, the tell is going to be right here today. Okay, look at this region here. Let's just throw like this line up here. Former swing lows, former swing lows, former swing highs, pivot range, breakout zone, median lines in there for the current uptrend, and the resistance line for the previous downtrend. So if this is a break of trend resistance, check it of support, that should be the limit for the decline before you move higher. Okay, you got 33.97 and 34.45 on the upside if this holds. This is, for me, what it's about today. Okay, so on any weakness in SPX, man, I mean, again, this is a real micro way of looking at price action when you're on these breakouts. Again, in the environment we're in, I don't want to tempt anyone to get aggressive, but that's the outlook. I'm looking for 33.30, for 33.20s, 33.30s. Any low beyond that, you kind of think this is a false break scenario. You kind of readjust the slope and keep in the downtrend. But if this holds, yeah, you look higher. You look higher. Martin says, might be an inverse head and shoulders. No, you don't like it, but we can see, can we see Kiwi Cat? It might be an inverse head and shoulders, could be. Way too early to tell, Martin, but the tell would be on the pullback here. Yeah, if you get another shoulder to get the neckline break. All right, so Rohan, hope that helps on SPX. NASDAQ, I don't know. I feel like we just looked at this not too long ago. But it's the same trade, Rohan. It's the same trade, okay? This thing is broken, support. You've made a pretty deep dive. You're coming on the rebound. Same thing here. If you look at this real near term, looks like you just kind of broke near term downtrend resistance. So you'd look for this rebound. Made a 38.2 already. I just want to see what this looks like. Something like that. That close right there. Look for support ahead of there if you're heading higher. Right? Real near-term look, man. Real quick for you. 122, topside breach from here. You're looking for the upper parallel, but really the 618 gives you 130. It's all going to be determinant on all of these trades on whether the pullback finds support on SPX on NASDAQ. Martin says the head and shoulders was about dollar Swiss, old message. Sorry. Yeah, you know what? It is still possible here, and I was looking at this here. It's possible here too. I thanks for the clarity, but it's definitely possible here too. Left shoulder, head. If this fails anywhere around this region, or ideally in our sweet spot, and breaks higher, you do have a measured neckline to get a breakout. So margin, not surprising actually, that inverse head and shoulders actually appears on many different assets, and it's not surprising with, you know, corollary assets giving same type of technical formations. Okay, so let me jump into your questions here. Marchin, looking for Kiwi CAD, Aussie CAD, and Sterling Kiwi. Okay, so let me take this in order. Kiwi CAD looks like this. So I have this in a consolidation range. Here's your monthly open. And the monthly opening range, set a high, set a low, topside break. I mean, it's an expansionary range. Dude, I hate these. The structure of the advance doesn't look bad, right? That pitchfork we've been working with. I'm assuming you're the one who asked about this, March, and why we're looking at why I have a setup on this, but the broader structure looks right. The monthly range looks intact, and you're right slap in the middle of the monthly range. So on an objective look at this from the daily chart, I don't like it. From a trade standpoint, you're simply contracting. You know, let's drop this right now. It's not really helping. Still key resistance, monthly range highs. Put the median line support right under the monthly opening range lows. Drop that pivot. So look, this is what I'll say on Kiwi CAD here, Marchin. Broader picture, in my humble opinion, on this one. You're still constructive. I don't know how you're looking to attack this. I can't remember. Are you looking to near-term trade this? On the near-term front, you look for this rebound to get a little bit more steam to the upside and then failure, ideally ahead of 89, right? For a little bit more of a crunch. Ultimately, I do think it's still an uptrend, but you'd need to clear 89, 89 the long side to get this thing going. Bears, it's 89. Every way you slice it, it's 89. All right, so a little bit more upside from here. Look for exhaustion ahead of 89, resumption, excuse me, sub 87.36. That's actually the objective yearly open. I'd like to see that break, and then you look for continuation towards 86 and beyond. But I do think you have a little bit more risk for a recovery off this. All right, Marchin. So that's your Sterling Key, or excuse me, Kiwi CAD. Next one is Aussie CAD. Same thing, a little bit more upside, but look for failure. This one pivoted below the median line. So I actually like this one finding failure a lot sooner. Very objective, bearish inval here. Last year's open, this month's open. 96.22. Bearish inval or resumption, right, for the broader correction higher. I still think you risk another low here. Here's your monthly open. Monthly opening range was set. Very clear break of the monthly opening range low. If we close above these levels, it would technically invalidate the monthly range break, but we're at resistance right now, right? So I look for exhaustion high ahead of that 2019 open for that last draw towards uptrend support. You always want these things to resolve near uptrend support. It's just the easiest way to validate a better stop, a more significant sort of position there. That's the high day close from June. Make sense? Last but not least, Sterling Key. Yeah, this one is same deal. Divergence into the high, looking for the kickback. So the pullback retracement levels would give you look for a reaction here today from, let's say, 94.90s to 94.50, if it's anything to happen. The one thing you also want to keep in mind, this is the objective weekly range lows. So irrespective of the 38.2 and the slope, that's just the weekly range lows, last Friday's close. So look for a reaction here. Any lower, I'd look for the bigger setback to get long. Sterling is the kind of variable here. And I love Kiwi strength. So yeah, I would say look for a deeper cutback here. Ultimately, above 93 is a buy in my humble opinion, Marcin, but I think you get the risk for a larger pullback in all of these trades as well. They're all thematically the same positioning from a technical standpoint, guys. Again, heading into the close of the month, just keep it simple. Keep it simple. A lot of these mid-range trades I stay away from, right? Okay, you're more than welcome, Marcin. Always a pleasure to see you in the room. Any other questions or trade setups you'd like to review? Let me know. Otherwise, guys, stay light. Keep it simple. We're heading into another great month. With everything that's been going on, I think October is going to see a decent amount of volatility as well. So enjoy tonight's debates. I hope you guys get some popcorn and get some drinks. Just chill out. We'll pick things up right into the start of the month, guys, on Thursday morning. We'll open up the month with a fresh kind of view of what's going on. I'll give you guys a preview of non-farm payrolls on Friday, and I will see you then. Rohan wants to take a look at Aussie Yen real quick. Sure, let's just take a quick glance there. This is very risk-sensitive pair. So typically, if you're going to see a rally in markets, or we're going to see broader sentiment fix, Rohan, or we are seeing resumption rather of the SPX, for example, you would expect to see Aussie see some strength. So for me, the Aussie trade in general is going to be the same as this Aussie Yen trade. I think near term, you do risk a little bit larger recovery, but below 76.20s, you're kind of still looking for that deeper correction. All right. Best of luck trading, guys, and I will see you on Thursday. Cheers.